Good morning and good afternoon to all of our attendees. We thank you for joining us today. Presenting for us is Paul Hollingworth, and he is here to discuss the LATAM Art Fund. The LATAM Art Fund is a Delaware-based fund dedicated to investing in blue chip and emerging unicorn artists from Latin America, as well as digitalized art-related assets. The fund is unique in fusing physical with digital art opportunity, as well as adapting a systematic fund and risk management framework. The fund has an experienced executive team with a strong track record at the LATAM investment, as well as a high quality art advisory committee. At the end of today's presentation, we will have plenty of time for Q&A, and we really encourage your questions. Please use your questions chat at the bottom of your screen to submit on over all questions. And Paul, I will let you get started.
Thank you very much, Lindsay. I'd like to thank all of you for being here and thank FON for making this webinar happen. Art is an under-owned asset versus other asset classes. Despite generating high, uncorrelated, low risk, inflation hedged returns. Latin American art is undervalued versus works from the developed world. This includes many Latin American women artists. Art is attracting forceful demand from changing global demographics and tastes and technological trends. Art is also undergoing what we refer to as a Big Bang, which is a term from the financial sector in the 1980s. We're seeing a transitioning away from a complex and expensive ecosystem towards a simpler and more transparent marketplace. Digitalization, blockchain, online activity, virtual reality, augmented reality, AI, DeFi, fintech, and tokenization are just part of the structural transformation underway and in its infancy. A market calculated at $1.7 trillion has the potential to double and triple in size over the coming years. As Lindsay said, we're a Delaware fund. We store our art in Delaware. We're a US company. I think it's important to start by having a look at the team. We're going to start with the advisory committee, a font of art wisdom and connections. The art advisory committee will guide on art trends as well as cultural dissemination. Working in conjunction with a company, Pall Mall Partnership in Pennsylvania, our third-party advisors. We start off with Dawn Addis, CBE. Dawn is a world-renowned art historian who has published on diverse subjects such as Dada, Surrealism, women artists, and is a world authority on Latin American art. There's Karen Grimson, former MoMA curatorial team member for Latin America and a prominent art historian. Karen has a deep understanding of the role of women artists such as Tarsila do Amaral and Sarah Grillo within modern art history. And there's Catalina Monguilit, a former brand manager at Art Basel, where she led the implementation of a successful digital asset management platform. Catalina is an art advisor to MACBA, the Museum of Contemporary Art in Buenos Aires. Andrew Snyder, well known, of course, to many people here, is a member of LATAM Capital Management. Andrew is a founder and CEO and president of Family Office Networks. Andrew is an expert in the startup of hedge funds, private equity funds, and real estate funds. With regards to the board of directors, our export board of directors is based on blue chip and investment fund management acumen. The board of directors consists of Dean Newman, award-winning former head of emerging markets at Invesco Perpetual, Latin American investment expert, and an experienced fund board member and investor in fintech. Andres Bernal, former CFO at Grupo Sura, one of Latin America's biggest multinationals, an investor in and builder of quality Latin American enterprises, and current CEO of multi-Latina Grupo Orbis. Paul Hollingworth, myself, former head of research and head of corporate finance at Banco do Brasil Securities in London, CEO of Creative Portfolios Limited, and the founder of the Latin American Art Fund. Pierre Papette is an art, financing and consultancy expert with wide experience of the financial sector. Pierre has a great passion for art and investment like myself, and he will be very much a bridge between the non-executive board mentioned before and the advisory committee. Pierre was awarded certification from the UN Principles for Responsible Investment, PRI, and from Sotheby's Institute in Art and Global Finance. I must also mention here that the administrator is Fleming Fund Services out of Bel Air in Maryland. And they have an extremely important role to play here as a de facto CFO. And the non-executive board mentioned is very important. I have to stress the checks and balances that the corporate governance is of the highest quality. Here are some pictures of aforementioned members of our core team. The LATAM Art Fund has 6 main pillars. One, a fund and risk management approach, which I think is atypical of many art funds. 2, we look at blue chip and unicorn artists or emerging artists. We're very serious about women artists. We see art and our fund as an inflation hedge as part of the real assets debate. There's only, I think, so much infrastructure or commodities that you can buy, and as a real asset, I think art is very underappreciated. Then there's the digitalization and tokenization thrust of the fund and of the art market in general. And there is social impact investing, which is something that we're very serious about, in that 15% of carried interest will go towards sponsoring art scholarship between the US, Europe, and Latin America. Our approach is unique in that we fuse LATAM physical art, mainly blue chip, but also unicorn artists, emerging artists, many of whom are women, with digital opportunity. We aim to capture sector structural change, which is the driver of new and alternative market opportunity. We are looking to tap into this big bang and looking to tap into new markets, new exchanges. We uniquely, for an art fund, utilize a disciplined fund and risk management strategy. More of that to come. We screen over 750 artists from Latin America. Art is an under-owned asset with low risk, inflation hedged, high returns within a diversified portfolio. Diversification is very much a key theme in this talk today. So what is the art market? The art market is it's really very cumbersome market. It's a very expensive, costly market. And I suppose it's been that way for a reason. This is going to be simplified in the future, or it is being simplified today. Deloitte estimates the total value of the art market to be $1.7 trillion. Sales in 2019 through dealers and galleries were estimated at 36.8 billion versus 24 billion at auction houses. That's roughly 55% dealers and galleries, 45% auctions, depending on what data you're looking at. Art functions within a highly complex, expensive and inefficient ecosystem of artists, dealers, auction houses, galleries, museums, philanthropists, shipping companies, storage facilities, insurance companies, advisors and appraisers, lawyers, banks lending against collateral, art rental. There are some 1,300 art museums worldwide, some 9,000 major private art collections, 3,000 major dealers. Today, the old system is going through this big bang I talked about before, built on a new sense of trust, reducing transactional costs, which can be around 25%, strengthening digital identity, enhancing overall market transparency, generating new participants and creating a new asset system. With digitization, art market infrastructure is changing rapidly and volumes are on the move upwards. Technology is transforming the estimated 1.7 trillion art market, creating a new, more efficient way of doing business and fashioning a reinvigorated asset system based on transactional and information efficiency, provenance underpinned by cryptographics and by AI. Blockchain offers a path towards secure transactions, more democratic ownership, access to provenance, authenticity, verification, clean ownership and rental records, title of registry, while fortifying confidentiality, custody, and supplying transparency around giving. Online galleries and auctions, virtual exhibitions, tokenization, new marketplaces and exchanges, and virtual augmented reality are in their infancy. Due to the pandemic, museums, art galleries, dealers and auction houses are in transformational mode in order to respond to COVID-19 and to structural change accelerated by the pandemic. Online activity has partially offset some of the lost market from art fairs and galleries, jumping to about 12.5% of sales. Some 40% of online purchases are now by the under 40s. NFTs have exploded onto the scene. Tokenization and fractionalization are gaining traction. Liquidity, authentication, and artist independence are all enhanced. Art is underowned versus other asset classes, despite generating high, uncorrelated, low-risk inflation hedged returns. This is very surprising and an opportunity for everyone, given that art is a scarce asset with forceful demand stemming from changing global demographics and tastes and structural transformation, while traditional asset classes today look very vulnerable. Some 68 trillion of wealth will flow from baby boomers to Gen X and millennials. This is the largest transfer of wealth in history. Social impact philanthropy is on the rise. The emerging world is generating wealth for potential buyers of art. In Asia, there is a new group of young collectors in their 30s and 40s. They often come from high tech, they have spending power, enjoy risk-taking, and unlike previous generations, they are less frugal and focused on contemporary art. Both social media, especially Twitter, I might add, but also Pinterest and Instagram, and going to galleries and museums, they're important. Credit Suisse estimates that in 2020, there was a 40% jump in new buyers of art. New capital is penetrating the market. Digital collections are booming. Purchasing power of high net worth individuals globally has never been greater. In terms of rapid technological and generational change, high quality art content, physical and increasingly digital, will have an enduring value, attracting both old school and new players onto the scene. LATAM artists from Latin America, especially women, are underrepresented in the major museums and galleries of the USA and Europe, let alone Asia. This will change with demographic and diversity shifts. It is surprising that so few LATAM works of art have sold for more than 1 million, given LATAM art has a global collector base. The LATAM Art Fund team has identified target artists, many including women, from the 1930s through to the modern day, in Uruguay and in other parts of Latin America, such as Mexico, Brazil, Chile, Peru, Colombia, Ecuador, Bolivia, Cuba, with a developing auction profile rather than speculative market characteristics. As a portfolio diversifier, we will also consider digital assets, for example, in provenance and data registry and in virtual gaming galleries, for example, only if we adjudge that the valuation and business proposition be sufficiently advantageous to our investors, and if we partner with blue chip operators in this space, companies like a Bloomberg or a Tencent. We adopt a disciplined fund and risk management strategy with a focus on diverse, high quality, value and momentum assets from the LATAM art market. The LATAM Art Fund will concentrate mainly on established liquid artists with a proven auction history and a low coefficient of variation, as well as active emerging painters with a more limited but tangible auction history. We will avoid speculation and going up the risk curve. We will consider selling an asset once it attains our target price, We would look to hold an asset for at least 5 years. The longer a painting is held, the higher its risk-adjusted return. No single asset will have a weighting of more than 5% of the fund. A minimum asset weighting is 0.05% of the fund. We calculate average acquisition price at 200 to 250,000. We have identified a sweet spot between 1 million to 10 million and under 50,000 for liquid and emerging artists where the coefficient of variation is lowest. We stress that we see LATAM artists, including many women, as fundamentally undervalued versus more famous liquid developed international names. We are strictly wedded to the principle of diversification within Latin America and diversification between physical and digital. We believe that selective high-quality Latin American art assets from established and emerging artists with a track record in the market can be revalued strongly upwards over a 7 to 10-year period. The return can comfortably outstrip global equity markets, where a traditional 7% per annum return will be challenging from here, based on historical work that we have done. Bond markets offer scant compensation for risk, while real estate cannot be the only asset. It has to be diversified with other real assets, and there tends to be a high Sharpe ratio in real assets like infrastructure, for example, and art. We view art as a low volatility, low correlated, inflation protected, low risk, high return alternative asset with portfolio diversification characteristics and a relatively low loss rate. The risks related to acquiring and owning art can be split into 3 areas: risk associated to the art world or the world in general, risks connected to buying or selling artworks, and risks linked to the specific asset. This graphic from our friends at Masterworks, I think, is very interesting. Art is about half the size of the private equity market, about the size of private real assets, 1.7 trillion. It is much smaller than the gold market as well. Our belief is it's going to be moving up by bubble, if you like. Average asset allocation, ultra high net worth individuals, 5% of their assets tend to be in art. We see this as very low indeed, and institutions are virtually zero. This will change over the next decade, and we are thinking long term. We think in terms of the long-term horizon and long-term partnerships. Art returns tend to do better than the S&P 500. This is actually contemporary art, and it handsomely outperformed the S&P 500. In times of market downturns, art tends to it does get affected, but it tends to do less worse than risk assets. This, I think, is extremely important as well. Art, this shows art has a low correlation to other assets. It provides diversification and has lower portfolio volatility. So we're talking about, again, a high Sharpe ratio, a high risk-adjusted return. This is important to us. This shows quite clearly that for works priced between 1 and 10 million US dollars, the coefficient variation is 2.5, and for under 50,000 is 2.4. So you want a coefficient variation that is low, and that is achieved with works of art in those two categories. In terms of liquidity, rank and returns, we see the coefficient variation for liquid assets is 1.9, and for active assets is 2. This is very important to us. We are very wedded to a low coefficient of variation. We've talked somewhat about our risk management philosophy based on quantitative metrics, and wherever we go, we seek to mitigate risk. While we will be looking across Latin America for opportunity, whether it be in Colombia or in Cuba maybe, or other countries, the Latin American Art Fund will be paying special attention to Uruguay, a market with potential and low risk within Latin America. Uruguay has a Fitch ESG relevance score of 5 for political stability and rights, and for the rule of law, institutional and regulatory quality, and control of corruption. Uruguay is the 81st percentile for WBGI ranking. You will see the graphic at the bottom, and that's the Lazard investment universe for ESG. This is actually Uruguay, and where you see the light green sort of bulging out from the center, that is good. That shows that Uruguay is doing well. And Uruguay's overall ESG score is more than 1 standard deviation above the median of their 80-country investment universe. The country's E, S, and G scores are all better than the median, with a particularly strong governance score that is nearly 2 standard deviations above the median. So this is, for us, it's like when you look at bond yields, this reduces our risk. With a population of only 3.4 million, the Uruguayan art market has punched above its weight in the last few decades. being well represented at the Venice Biennale and the Sao Paulo Biennale, while cultivating closer connections to the US. Uruguay is an innovation and creative hub. That's the kind of country where we want to do business in. Uruguay has a thriving tech scene. Technology is viewed by the government as a strategic asset, as it is in Israel, a market again of great substance. In the 1960s, Uruguay became the first country in the region by a long way to introduce computer science degrees, just 2 years after MIT. In 2007, it was also the first country in the world to implement a one laptop per child program in public schools. Now, Uruguayan art is, as is other jurisdictions in Latin America, has some remarkable characteristics. Uruguayan art has a distinct brand with notable artistic phases and heritage, commanding internationally a strong, reputable liquid auction history with a high sale-through rate. Uruguayan art has notable artistic periods and heritage. The 1930s and 1940s were a golden age with Joaquin Torres Garcia and his great workshop. Uruguayan art has commanded an internationally strong, reputable liquid auction history with a high sale-through rate. If anyone knows who painted that picture on the left, then full marks to you. It's by the great Jewish Uruguayan artist Gurvich. Since the 1930s, many US galleries have exhibited works by Latin American artists such as Frida Kahlo, Rufino Tamayo, Roberto Matta, and René Portocarrero, the great Cuban artist. Furthermore, important museums such as MoMA have dedicated great exhibitions to Latin American artists like Tamayo and Roberto Matta over many decades. These were followed by exhibitions of other Latin American artists in museums across Europe. For example, Jesus Soto in 1968, and in the US. There have been regular international auctions dedicated to Latin American art since 1979, with the big auction houses dominating the market, especially for the most expensive artworks, in addition to a group of other smaller but very active auction houses in Europe and the US. This enduring and increasing interest has led to the existence of a broad and established market. We like that. We like to see track record. We like to see a history, a tradition. Both Sotheby's and Christie's and Phillips since 2009 conduct regular auctions of Latin American art twice a year in May and in November. The market for the majority of the great Latin American masters is relatively liquid, with a fairly large number of works being sold each year, with Garay, Perez and Pulgar in a 2019 paper calculating 1,627 auction sales for the Big Five over 2003 to 2018, the Big Five being Rivera, Tamayo, Lam, Matta and Botero. I thought I'd just give some visuals of our blue chip universe, and we start with arguably the best. I mean, we start with the great Botero, and just what a mark he has made in the art world globally. What an inspiration he has been to his native Colombia as well. Wilfredo Lam is again on a par with Botero, and we can see here that some of these great works have gone for, you know, just under $10 million US, $5 million, $5 million actually, two of these pictures, and $3.5 million for one of them. Rufino Tamayo, very exuberant and popular artist. And again, here he has achieved sales of 6, 5 million, 4 million, that kind of range. Joaquin Torres Garcia, this is an epical piece which was sold for $2.2 million in 2020. As we've said, Joaquin Torres Garcia has been an inspiration and is very much a very unique Uruguayan style with a lot of traces of Fauvism, and I think there's a touch of Baroque there, and inspired by Gaudi and all kinds of influences. I could go on for a day about this artist. Blue chip artists, these are just a collection of what kind of returns we can get from, these are just some small pieces from Joaquin Torres Garcia. You can see the type of returns you get, 15.5 times in 23 years, 2.3 times in 6 years, 6.3 times in 3 years, 4 times in 17 years. It's also important, apart from the blue chip art, to think about the unicorns, think about the emerging talent. LATAM is a ripe hunting ground for emerging talent as never before. These great blue chip artists are really, if you like, providing a springboard for a new generation of talent. While we concentrate primarily on the blue chip established artists with an auction track record from across Latin America, in conjunction with digital related investments, we will be keeping a close eye on potential future stars. We will endeavor to uncover the next Torres Garcia or Leonor Finney. Here are a couple of unicorn artists I particularly like. Again, prizes to any of you who know who painted these pieces and where they came from. But if you know it, very good. I'm not going to disclose where they're from. This is another extraordinary piece. Women artists, long overdue market recognition is taking place at the moment of great Latin American women magical realists or surrealists who challenge roles and limitations within a precise, poetic and psychoanalytical framework. This bodes well for the evolution of undervalued artists, women artists in this space. There's of course Frida Kahlo, there's the amazing Remedios Varo, whose work has such concentration. She used to practice these most extraordinarily painful concentration exercises and techniques, and it reflects in her work. It's quite extraordinarily focused and precise. Leonor Finney, who's been very much like Remedios Varo and Alice Rahn as well, they are very much achieving the limelight that has been long denied them in previous decades. They are being discovered. Here is a slide again of some Frida Kahlo, some Alice Rahn, some Leonora Carrington. One can't forget her, a truly inspirational artist. Remedios Varo again, Leonor Finney. These are the key names, such extraordinary magical realism. Here we have some idea of what kind of returns. I mean, on again a smaller scale. I mean, if you look at, well, actually, if we go back, I mean, there's pieces here from Frida Kahlo that went for 2.6 million. Remedios Avaro 1.8 here. There's a Remedios Avaro here that went for 6 million. So we're talking about the big league for Latin America. On a smaller scale, we've got a Sarah Grillo piece here, which increased in value by 16 times over 20 years. I think she's very undervalued. There's a picture there at the bottom left by the great Tilsa from Peru, 5 times in 14 years. Mary Sol in the middle, 4 times in 3 years. And there's Eleonora Carrington, I thought I'd throw in there, 8 times appreciation over 19 years. Now, inflation and markets. Why art and real assets matter. Due to inflation and any press, and so many company quarterly press releases at the moment, everyone is talking about inflation. Due to inflation and the pricing of traditional assets, investors are hunting for alternative niche assets. This is generating new markets and exchanges. Central bank intervention has created a new zombie class that's called bonds. In pursuit of yield, not found in bond markets, equity markets resemble very often Bitcoin with casino characteristics. Alternative and real assets have really been so attractive given the collapse of price discovery in the orthodox 60-40 portfolio model. There's a lot more people now coming out with webinars and talks about how the traditional 60-40 equity income model is just not fit for purpose today. Supply chain bottlenecks and labor shortages are generating inflation. Moreover, with balance sheets expanding fast, as central bank balance sheets and government-directed credit creation and guarantees growing at a fair clip, broad money growth is double-digit in US and Europe. Debt monetization may be more attractive to governments versus alternative confiscationary options, if you like. Spikes in velocity of money risk adding to inflationary strains. Will the orthodoxy of raising interest rates be avoided? If so, this shifts the structure of finance. If we've seen a disconnect between inflation and bond markets, if central banks are going to put their foot down and not allow interest rates to follow market forces, then we have a real problem with the structure of finance. The combination of elevated public spending, strategic onshoring, and the war on inequality may drive inflation higher in the coming decade. Everyone is talking about inequality for a reason, and inflation will be, again, that could be the price to pay. Inflation will be higher for longer in a world of misallocated capital. Again, going back to the structure of finance, if the cost of capital is all wrong, then you will get inflation. We have seen this historically. The physical art market is a real asset, underpinned by an inflation hedge and by technological transformation. Technology. We are in a world very much of disintermediation, decentralization, DeFi, AI, cloud, blockchain and crypto, tokenization, virtual and augmented reality, fintech. Digital art has evolved over many decades since the start of the Lawrence Gartell revolution. Gartell, he taught Warhol how to use his computer. There's the great Absolute Vodka. There's the first Tesla car, which Gartell basically provided the art for. So digital art has been around for decades. However, the old, complex and expensive art market is undergoing a big bang. As we said before, building on newfound trust and transparency, reducing transactional costs, that 25%. Strengthening digital identity, enhancing information efficiency, generating new participants and creating a new asset system and markets. In 2018, Maecenas marketed the piece 14 Small Electric Chairs by Andy Warhol. Pre-auction, the artwork was valued at 1.7 million. With tokenization, the valuation jumped to 5.6 million. Recently, Visa acquired a pixelated artwork, there on the left, the CryptoPunk 7610 NFT. One of the 10,000 24 by 24 pixel images of the CryptoPunk collection generated algorithmically. This was Visa's first NFT, an avatar. The acquisition was executed via an Ethereum smart contract, decentralized software running on the blockchain and conducted primarily by Anchorage, who then stored the purchased NFT as custodian in Visa's digital vault, accessible with Visa's private key. Emergence of eBay-like platforms that allow anyone to trade their NFTs is exploding, and it's linked to Twitter. Like many DeFi platforms, OpenSea, for example, that's one I keep a very close eye on. It works with most Ethereum wallets, such as MetaMask. Blockchain offers a path towards secure transactions, more democratic ownership, access to provenance, authenticity, verification, clean ownership and rental records and title of registry, while fortifying confidentiality and supplying transparency around giving. Alternative markets and exchanges are developing. Digitization, tokenization, and securitization are the key words at the moment, the key buzzwords. As we said before, there's a boom in online digital collections and crypto boxes. This is a social phenomenon where collectors share their digital collections in virtual spaces. This is very much part of youth culture. Online galleries and exhibitions are growing fast. Online sales now represent about 12.5% of total sales. And we're at the very early stages of virtual and augmented reality. And where this ties in with art is extremely interesting. We're seeing the beginnings of this with online galleries, online exhibitions. So virtual and augmented reality as tools are going to be extremely important for art in the future. So we have a world where crypto enthusiasts, gamers, artists, auction houses, collectors, banks, and investors are all coming together in a dance of opportunity. Physical art is set to catch up with digital and NFT valuations to meet demand. I mean, digital art is more expensive than physical art in general. If fast-growing tokens are the derivative, the physical market is the underlying driver. The physical market needs the digital market needs the physical market. As a portfolio diversifier, the LATAM Art Fund will consider digital assets, for example, in provenance, data registry, virtual reality, augmented reality, and for virtual gaming galleries. There are so many opportunities in art-related digital assets. only if we are judged that the valuation and business proposition be sufficiently advantageous to our investors, and if we partner with blue chip operators in the space. You aren't going to get us buying a whole lot of NFTs at this stage until we have the kind of track record and price discovery which we need in order to make an informed, risk-adjusted decision. In conclusion, with digitization, the art market infrastructure is changing rapidly. We want to be part of that transformation. Technology is transforming the estimated 1.7 trillion art market, creating a new, more efficient way of doing business and fashioning a reinvigorated asset system based on transactional and information efficiency, provenance underpinned by cryptographics and by AI. Blockchain is not something to be scared of. It's like the beginning of the internet. There are bound to be ups and downs, but blockchain offers a path towards secure transactions, more democratic ownership, access to provenance, authenticity, verification, clean ownership and rental records, and title of registry, while fortifying confidentiality, custody, and supplying transparency around giving. The biggest risk is not to be involved with blockchain. That is a bigger risk than avoiding it altogether. Avoiding it altogether is we would argue, is not a sensible approach. One has to gradually work on the idea of and see just how blockchain is going to work across so many different markets, and art is no exception. Online art, online galleries and auctions, virtual exhibitions, tokenization, fractionalization, new marketplaces and exchanges. I think we're going to see a lot more exchanges, and virtual augmented reality are in their infancy. This is very early stage, but it is developing very fast. Sales in 2019 through dealers and galleries respectively were estimated at 36.8 billion in the art market versus 24.2 billion at auction houses. So it's that 55% dealers and galleries, around about 45% auctions on latest data I saw. Online now represents 12.5% of sales. While blue chip LATAM artists represent a broad and established market, they are generally undervalued, especially women artists. With a strict fund and risk management framework, the LATAM Art Fund targets specific momentum and value LATAM artists who exhibit liquid and active auction characteristics and have a low coefficient of variation. In addition, we also see potential in unicorn artists yet to be fairly valued by the burgeoning marketplace. We will focus on the relatively stable Uruguayan art market, which we highlighted earlier from a risk management perspective, because we like doing business in countries with lower risk and high governance and low levels of corruption. Countries which are doing their homework on ESG without ticking a box in a formulaic way. They are actually going about things in a mature way. And I mean, Uruguay, as we've said, it commands also a rich cultural heritage, an emerging artistic brand. But that's not to say that Uruguay is the only market, not by a long way. We see so many opportunities in Brazil, in Mexico. Mexico has the greatest artistic tradition of any country in South America and probably one of the greatest in the world. Chile, which shares like Uruguay this low risk environment relative to Latin America. Peru and Colombia, two great markets for art talent. Bolivia, who nobody talks to, but I've done a lot of work on Bolivia, and there are some extraordinary artists that absolutely nobody is talking about. And Cuba, completely different kind of story altogether. Very strong in Miami. Incredible artists, incredible potential. It's a market which we're keeping an eye on. As a portfolio diversifier within Latin American art, but also within assets in general, we will consider participating in funding rounds for digital art related assets only if we partner with blue chip investors and the valuation and business model are sufficiently advantageous to our investors. We're not going to be taking very big risks on this one. Art is under-owned versus other asset classes. I think this is one of the big points. We're talking about an emerging asset class that is going through a big bang, a structural transformation. This is the time where you invest, is when there is this big bang, this structural change. And we've talked about how art is under-owned. You know, it's a real asset. You want to be in real assets because of inflation. And you'll get a risk-adjusted return, which will be, I would argue, is higher than equities and I mean bonds. Is a sort of sad state of affairs, to be honest. So the breakdown of the 60-40 equity income model really gives a wonderful opportunity here for alternative assets, and I think art is as good as it gets. The LATAM Art Fund offers investors a low volatility, low correlated, inflation hedged, low risk, high return asset with portfolio diversification benefits. We go back to the 6 pillars: fund and risk management. We take a fund manager approach and we take a risk management approach. This is not the typical food and drink, if you like, of art funds before us, where things were maybe a bit more instinctive. We use quantitative metrics, and I've talked about this earlier. The blue chip and unicorn artists are the world we're focusing on from Latin America. The blue chip, if you like, the FANG names, and the unicorn artists, the emerging artists. We're looking for the next CrowdStrike, if you like, to have an equity analogy. We focus very seriously on women artists. We feel that women artists in general have been underappreciated for too long. That is changing, and the great pioneers that we've covered today are really proving an inspiration and acting as a springboard for new artists that are moving up the auction history ranks. The inflation hedge, we're very worried about inflation, and we see art as having protective mechanisms against inflation, which we think will be with us, will be higher and will be with us for longer. And the opportunities in digitization and tokenization. This gets plenty of news. there's plenty of hype here, and we try and cut through that and actually look for where tangible risk-adjusted opportunities are in this space. And social impact investing, we will want to align our returns with making an impact in terms of our exchange program for LATAM and European and US artists for exchange programs. So the LATAM Art Fund, it's a Delaware-based fund dedicated to investing in blue chip and emerging unicorn artists from Latin America, as well as digitalized art-related assets. The LATAM Art Fund is unique in fusing physical and digital art opportunity, as well as adopting a disciplined fund management and risk management framework. The fund has an experienced executive and non-executive team with a strong track record in LATAM investment, as well as a high quality art advisory committee. The fund aims to achieve a return of at least 9% per annum over 10 years. We're looking to raise $50 million US. Why invest? Because art is under-owned versus other asset classes, despite generating high, uncorrelated, low-risk inflation hedged returns. LATAM art and also LATAM digital art-related assets versus the developed world are undervalued. This includes many Latin American women artists and as well as some startups in South America. Art is attracting forceful demand from changing global demographics and tastes and technological trends. Art is undergoing a big bang, like we had in the financial sector some time ago in the 80s, transitioning away from a complex and expensive ecosystem with intermediaries, lots of layers of cost, towards a simpler, more transparent marketplace, or marketplaces, exchanges. Digitalization, blockchain, online activity, virtual reality, augmented reality, AI, DeFi, fintech, and tokenization are just a part of the structural transformation underway. A market calculated at 1.7 trillion, according to Deloitte, 1.7 trillion globally, has the potential to double and triple in size over the coming years due to the technological changes that I've touched on. Well, thank you very much for your time. Again, a prize to anyone who knows who that painting was done by. It's actually done by a Cuban artist. There are details there. Our website is down at the bottom, and the email address for myself is there. Thank you very much for your attention, and I'm happy to take any questions.
Thank you so much, Paul. Yes, let's jump into Q&A. Again, if you haven't submitted any questions yet, go ahead and use your Q&A section and send those on over. Let's see here, Paul. I may have missed it. This first question, he says, I may have missed it, but do you have a track record for this strategy?
A track record for this strategy?
Yes, sir.
We don't have a track record for this strategy, though we do have members of our team that have an extremely good track record in investment.
Great.
The thing is, we will be judged on our strategy. We think it's a winning strategy. We've done a lot of homework, a lot of technical, scientific work, and we feel we're in the right market. And we think the returns that we are offering are on the low side, and it would be ingenuous to go for a number that sort of sounded too enticing. We're actually being quite modest.
Great, thank you so much, Paul. Next question, how much turnover do you anticipate of the portfolio art? And to what degree will actual sales versus appraisals drive the NAV of the fund?
Well, the appraisals, we have a collateral agent, and they will be valuing the work on a frequent basis, certainly on an annual basis. Pall Mall, who will also be advising us on our acquisitions, and so they're extremely important to us. I mean, we're not going for a quick NAV uptick, we're just not interested in some cosmetic revaluation of assets. We will be looking to market and sell pieces that we acquire through exhibitions, and through a network of our connections in the world of auctions and galleries and private dealers. And we would be looking pretty much to hold an asset, for 5 or 7 or 8 years in some cases, at least for the physical art. So I think that answers the sort of NAV, but we are looking at doubling the fund over 10 years, the value of the fund over 10 years, which gives you the return that we are talking about.
Fantastic, thank you. Next question, will portfolio assets be loaned out or leased during the fund's ownership?
Very good question. We have a team looking at art rental. It's particularly big in Mexico, actually. It's a market which we do quite like, but we won't sign on the dotted line until we have a little bit more homework's done on it. It is something we are looking at. There is, of course, the question of insurance costs, because, if we buy a piece and we store it in Delaware and, we bring it out for rental, it sort of gets a bit more complicated. What happens if it gets damaged, on the road, or it gets damaged in the hotel or restaurant where it's sort of hanging in all its glory. That's a real concern to us. So we would have to look at ways of how to reduce risk there, just to be more secure about this exciting dynamic market, but we would be bringing out, obviously, pieces for exhibitions and to go onto the market. Whether we go down the art rental route, we are looking at it.
Wonderful, thanks, Paul. That was actually the last question that has pulled through. So do you have any final thoughts for us today?
Me? Oh, yeah. I think you've all probably heard enough of me, but I would like to thank everyone who has attended, often, with different time zones, and I'd like to thank very much Lindsay and the team at Family Office Networks for making this happen. Thank you all for your attention.
Thanks so much, Paul. It was lovely having you join us again today. To all of our attendees, thank you so very much. We'll be in contact with you, so if there's any additional questions, we will make sure that we get them answered. Have a great day.
Thank you.